Imagine waking up one morning and discovering that a stock almost everyone had walked away from, a stock Wall Street analysts once dismissed as a failure, suddenly became one of the most talked about investments in the entire country. A stock that had fallen nearly 90% from its highs was now climbing again with a surprising amount of momentum. That stock is Opendoor. And what's happening around it right now has captured the attention of big investors, small investors, skeptics, and believers all at the same time. Before you decide whether Opendoor is a chance to profit or a dangerous trap, you need to understand the full story, because it's far more complicated than it looks. Opendoor, trading under the symbol OPEN, built its entire business on a bold idea: make buying and selling homes fast, easy, and predictable. Instead of the traditional process that takes months, involves agents, paperwork, repairs, and dozens of steps, Opendoor wanted to streamline everything. They would buy your home instantly, fix it, and resell it. In theory, it solves one of the biggest frustrations in real estate. But in reality, it's a business that demands massive capital, accurate pricing, and constant adaptation to changing housing markets. For a few years, Opendoor was considered one of the most innovative companies in the real estate technology world. Investors loved the idea. People imagined a future where home buying would become completely digital. But then interest rates started rising. Mortgages became more expensive. Buyers slowed down. Sellers hesitated. And the housing market cooled significantly. When that happened, Opendoor's business was hit hard. Homes stayed on the market longer. Price adjustments became unpredictable. Margins tightened, and the company ended up carrying huge amounts of inventory at the wrong time. The stock price reflected all of this. Opendoor collapsed. It didn't fall slowly. It dropped sharply, losing the majority of its value. Analysts called the business model flawed. Some claimed the company would never reach consistent profitability. Others believed the company was simply too exposed to housing downturns. For a long time, Opendoor became invisible in the market. It wasn't a trending stock, it wasn't being discussed, and it wasn't a priority for most investors. But the market has a habit of revisiting companies when no one expects it. A highly optimistic investment thesis surfaced online, a long, detailed explanation from a major investor who believed Opendoor still had massive potential. This bold assessment spread across social media. Retail traders noticed it, debated it, and many became convinced the stock was deeply undervalued. This type of viral momentum can completely change the direction of a stock, especially a stock with a smaller market cap. Suddenly, Opendoor wasn't ignored anymore. It was back in the spotlight. However, the reason Opendoor began rising wasn't only due to online excitement. Behind the scenes, the company was making real changes. Leadership shifts signaled the company wanted a fresh, more disciplined approach. Operational improvements reduced unnecessary costs. Inventory strategies became more careful. The company refined how it priced homes, how it moved inventory, and how it handled risk. These adjustments didn't magically fix everything overnight, but they showed investors that Opendoor wasn't standing still. It was adapting. Even with these improvements, many analysts remain cautious. Their biggest concern is profitability. The iBuying model, buying homes and reselling them, is extremely sensitive to economic conditions. If housing prices fall even slightly, margins can evaporate. If interest rates stay high, demand slows. And if Opendoor miscalculates pricing, losses pile up quickly. That's why so many analysts are hesitant to call the stock a buy. They want proof. They want consistent earnings. They want stability. Meanwhile, investors who are bullish on Opendoor see a completely different picture. They argue that the real estate industry is outdated and desperately needs modernization. In their view, digital home selling is the future, and Opendoor is years ahead of any competitors. They imagine a world where most home transactions happen online, where instant offers are normal, and where the process is fast and predictable. To them, Opendoor isn't just another company. It's a pioneer, and pioneers often face early challenges before achieving major success. But when you look closely, the truth isn't entirely with the bulls or the bears. It's somewhere in the middle. Opendoor is a company with real potential but real risk. It has a vision that could reshape an industry, but it operates in one of the most unpredictable markets in the world, housing. It can perform extremely well in a strong housing market and struggle deeply when conditions shift. This dual nature is what makes the stock so interesting and so difficult to predict. As Opendoor stock began rising recently, it wasn't just because of company performance. It was also because of investor psychology. Retail investors created momentum. Online discussions amplified that momentum. People love comeback stories, and Opendoor began to look like one. But momentum can work both ways. It can lift a stock quickly, and it can bring it down just as fast. This is where Opendoor starts to resemble what some people call a meme stock. Not in the sense of being a joke, but in the sense that social energy, optimism, and viral attention can influence its price just as strongly as financial results. So, where is Opendoor truly heading from here? That depends on several factors. If interest rates begin to drop, the housing market could see more activity, which would help Opendoor significantly. If the company continues improving its pricing algorithms and operational efficiency, margins could grow. If more homeowners become comfortable with digital transactions, Opendoor's customer base could expand quickly. These factors could push the stock much higher over the long term. But the risks are just as real. If housing trends weaken, Opendoor could face financial pressure again. If the company misjudges market timing, inventory losses could grow. And if investor enthusiasm fades, the stock could lose momentum quickly. Opendoor is not the kind of stock that moves slowly or predictably. It responds rapidly to economic conditions, investor sentiment, and market trends. What makes this story even more compelling is that Opendoor is in a rare position. It's a company trying to reinvent an entire industry while also trying to prove that its business model can survive different economic environments. That's not easy. It requires smart leadership, careful risk management, and the ability to learn from past mistakes. The company has improved, but it hasn't yet reached the stage where investors feel completely confident. One thing is certain. Opendoor is no longer the forgotten stock it once was. It's now at the center of a major debate. Some investors believe this is the beginning of a massive comeback story. Others believe it's only a temporary rise fueled by hype. And then there are those who are simply watching, waiting to see whether the next chapter will confirm the company's potential or expose new weaknesses. For now, Opendoor remains one of the most fascinating stocks in the market. It represents innovation, opportunity, volatility, and uncertainty all at once. Whether it becomes a long-term success or a cautionary example will depend on the decisions being made now, both inside the company and in the broader housing market. This script is for educational and informational purposes only. It is not financial advice. Always perform your own research or consult a licensed financial advisor before making any investment decisions.